Hi, everybody. This is Adam Smetzer at Sky Vision Wealth. It is Saturday, April 4th, 2026, Easter weekend. I hope everybody's having a great time, spending some family time and really appreciating all the great gifts we have this time of year. Given we had a 3-day weekend, I thought it'd be a good time for a market update. And so I'm going to share my screen. I'm going to walk you through some of the things that I've been seeing. I thought we saw some notable things this week. And so we'll just kind of walk through. We're going to walk through some of the indices, some individual stocks as well. And without further ado, we're going to dive right in. Let me share my screen with you. Okay. All righty. Okay. So markets have been in a downtrend really since the start of the war. We've had some things that really started going down prior to the war. We're going to walk through some of these things, but really, I just thought this would be a good time. The S&P 500 was down 5 straight weeks in a row, and it finally had an up week. So I wanted to kind of walk people through what I'm seeing as far as what the trend is. I tend to look at this on both short-term and longer-term durations, but I'm really just trying to understand, where we are in the bigger scheme of things and what the market is saying about where we are. So let's just kind of dive in. I've got the S&P 500 pulled up in front of me. Okay, and I can bear with me here. Yeah. All right. So this Monday, we kind of came in and we had this low here on Monday. And then we had, of course, it was a short week. We only had trading through Thursday, but Tuesday, market had a big up day and then had a little bit of follow up the following day. And then Thursday was to me the most interesting. It barely closed positive, but I think that this was a really interesting day, and I'm gonna talk about that here in a minute. One thing I will note is that we are still in a downtrend. Okay, that could change very quickly, but you can see this pink line here is our 20-day moving average, and when you are in a downtrend, you tend to break that 20-day and you tend to kind of live below it, and it starts to act like resistance, almost like a ceiling on the way down. You can sort of see that. You can kind of see that over here. Let me see if we can kind of move our chart a bit. Let me unlock this. There we go. Okay, so you can see over here, this was the tariff tantrum. Okay, and you can see how this pink line, really the whole way down, it kind of acted as a ceiling. You had these little up moves, but it was really hard to get above and stay above that. Versus, see how we get into a nice uptrend and the pink line tends to act like a floor, meaning when the market is really strong, again, we tend to stay above the 20-day most of the time. We can kind of get below it, but it kind of gets bought back up, right? So this is one of the lines that I pay the most attention to. And you can kind of see that when we got into Monday, we started to get really kind of extended from the downside from that 20-day moving average and even your 10-day here. Okay. And it's just very difficult unless a market is going to absolutely just crash. It is really hard to get too far extended without having some kind of a snapback. So Tuesday's action didn't really surprise me a whole lot. It was nice to see, but we kind of had this up day and we really just kind of came back into a falling 10-day. And over the last 2 days, we kind of went up and we are sitting right below that 20-day line, but we've not been able to get through it quite yet. So that's one thing we're going to be looking for as we get into next week. But I think what's notable here is, let me see if I can draw a couple of lines, is one of the things we look for when we're doing trend analysis and we're in a downtrend like this, the very first thing that we are looking for, and it sounds so basic, but we just want the market to quit falling. Okay. And objectively, the way we can think about that is we make a low. Okay. And I'm trying to kind of mark it here on this bottom line. Let me see if I can just drag just a touch. Yeah. We make a low and then we don't trade back below that low. That's my definition of, the market has kind of stopped falling. If I can get this not quite right there. But you can kind of see this is now our low, and we do not want to see the market go back below that point. Okay. If this is going to be it, we don't know what the next few days are going to bring or the next few weeks are going to bring, but we really want to see this low hold. That would be a good sign that there is support there, that buyers are willing to come in there, that there is demand for equities there. Okay. But if we were to get below that, that would tell me that obviously we have probably some further room to go to the downside, but also this is just going to take more time from a market perspective to resolve. So that is kind of one area that I'm looking at as a really important level to the downside. We can have some down days, but as long as that level holds, it might be that the worst is already behind us, but we're just going to have to see. Now, on the upside, I'd really like to see us get above the 20-day. Okay, we are 1, 2, 3 days beyond this low. So as we start to get to day 4 and beyond, and we can maybe start to get above this 20-day line and back above our 200-day line, which is both of which are really important. I think that would be a signal that we may be starting to climb out of this. But we're just going to have to see because you can have these snapback little rallies in a downtrend, and we really just got to kind of pay attention and see what the market gives us without trying to assume too much. But we're kind of at an important spot here because if we were to get a really nice day where we could get above the 20 and get above the 200, especially with some power, we might get like a classic William O'Neill follow-through day where he kind of looks for this low. And once you get about 4 days out, I think the technical definition he used, if you're familiar with O'Neill, was 1% greater in price on an up day. With volume higher than the previous day, we could get that as soon as Monday if it were to occur, and that would be a good sign. And then we'd just see if we could build upon that. Okay, getting above the 20-day and staying above it, and that would be the market starting to confirm that perhaps we are on our way out of this downturn. But we're just going to have to see, because if you kind of go back over here and you look at over here in April of last year, it started in February. We had this leg down and we kind of had this low here, and we made a similar rally attempt, okay, in this downturn. And we got above the 20-day for, about a day or two, and then it failed. And, that was really, we were only at about halftime. we had these ugly days, and we had to go all the way down here until we then really started to get above, the 20-day in earnest, right about here, this day here. All right, if I can kind of mark that. So, and then the market confirmed that out. Okay, and so again, this is kind of what I look at. Notice I did not say anything about we need oil to come down, or we need the war to resolve, or we need anything like that. Are those things important and going to be driving a lot of the activity? Yeah, it's going to be. Those things are hugely important. It's just that, I would also tell you not to get too caught up in a specific narrative, needing a specific event in order to feel comfortable with where we are. And the reason I say Thursday was actually the most interesting day, even though the market was barely positive, I thought Thursday was more impressive because on Wednesday night, Trump comes out at 9 p.m. and he'd been tweeting, the last couple of days about, hey, deal this, deal that, it's going to be over quick, all this stuff, getting people excited. And then he comes out Wednesday night at 9 and basically says, we are going to hammer these guys for the next 2 weeks. And I'm not sure the tone of it was what people were expecting. And oil, oil shoots up the next day, right? And the pattern here has been oil up, stocks down, bonds down, gold down. Okay, oil goes up a lot on Thursday, but stocks basically, if I can go back to the S&P, stocks basically shook this off completely. Meaning, the stocks, it was kind of the first time in this downtrend where oil goes up and stocks didn't care. If we go to the 1 minute chart, it'll kind of show you we opened the day down. Okay, stocks go down hard on the open. They were down all night in the futures market, and it pretty much got bought back immediately. Okay, and then we kind of just traded sideways, rest of the day, and so to me, that was a good sign where you have a situation where the environment we've been in is you have bad news and stocks go down, right? And that makes sense. Okay. You could argue that we got kind of bad news or unexpectedly like hawkish kind of news Wednesday night. Oil prices go up, but stocks did not go down. And that is a potential change in character to kind of notate. And we are, again, just kind of above, just kind of right at this line. So let's see if we can make some progress. And again, just be careful of what you need your narrative to be, right? Because most people, I think, are of the mind that if the war ends very, very quickly, stocks will shoot up. And that, could happen. And, that would make a lot of sense. Okay. But subconsciously, you might also then believe that if the war doesn't end quickly, that stocks can't go up sustainably. And I don't know that that's true. Okay. Especially after what I saw on Thursday. So I think things are going to be very volatile, but again, I would not get too locked into the news and the story. I would just look at what price is doing, because I actually think there is perhaps a even bigger opportunity here for investors, that, if things are messy and they don't just resolve as clean and as nicely as everybody would like them to, but stocks keep kind of inching up, or they, we kind of maintain the support and we start building out the right side of this recovery, and it doesn't fit with everyone's narrative. I actually think that is an environment that could offer a potentially bigger opportunity than the one where the war just ends and things go up and on we go. I mean, either would be fine, right? But again, just to kind of point this home, back here in the tariff thing, okay, I just remember a lot of people back here talking about tariffs and getting so hung up on all the uncertainty and how this was never going to get figured out. And, how could any of this work? And on and on. And is it going to be inflationary? And on and on and on. Well, the market told you back here that it didn't, for one reason or another, it didn't care about this anymore. Okay. And so again, I would argue tariffs are still not resolved. Right. I mean, we were going to go, weren't we going to go like country to country, land to land, and we're going to make a deal? We're going to make a deal over here. I don't know how many of these actually got done. How many of these are still out there? Are we still working on these? Oh, by the way, the Supreme Court ruled not that long ago that, tariffs are unconstitutional the way we did it. And so if we're going to do them, we got to do them another way. And so now are they enforced? Are people going to get refunds? Right? So like, if you get what I'm saying, this whole thing, according to everyone, was because of tariffs. And tariffs are still not resolved. But if you needed to wait until tariffs got resolved, you missed all of this, all the recovery plus this, while being right. Okay. Like if you thought right here, like this is going to be a mess and nobody understands tariffs and this is never going to work, like, and here we are. We're a year later and we still don't know what's going on with tariffs. And so you can sit there and be like, oh, well, I was right about tariffs. Well, fine. But, you were wrong in terms of market positioning, which in my department here, and we think about your portfolio, okay, and how that works to achieve your goals, that's what matters. It is not about being right. It is about preserving your capital and growing it over time and staying very mentally flexible and not getting too locked in on what the news is of the day. So again, that's kind of just a little lesson that I think is fresh in everybody's heads. Let's just pay attention to what the market is doing and have a plan based on our own strategy as to what we would do under different conditions. So that's the S&P. We can look at a few others. A lot of these indices look very, very similar. This is the NASDAQ 100. It's in a very similar position as the S&P. The Dow up here, this was 50,000 Dow. I keep hearing about Dow 50,000, and again, we're kind of living here, and it's in a very similar position as well. Okay, it's kind of down here below its 200-day, and it's kind of right where this 20-day and 200-day are kind of coalescing. So we'll just see. Small caps, we'll look at the IWM for that. This has been a little bit stronger. It is above its 200-day and above its 20-day. It still has not had a very good month, but it is off to a little bit better of a start than some of the others. So again, let's look at some ex-US. So again, international, this is more developed international. Again, had a really good start to the year and then kind of off a cliff here with the war, but is above its 200-day. We can go to emerging markets and kind of look at that. Not quite as good as developed, but again, international, for the most part, if you look kind of these broad indices, after really long periods of underperformance, have held up a little bit better, but I don't know that they've helped you that much as a percent of your allocation, because it's like we say, when stocks go down and when you have a really big event, they all kind of go down together. So people who are trying to diversify risk just by owning different types of stocks, there's usually a better way to manage your risk than doing that. I'm not saying you can't own all these different things and spread things out, but you can kind of see as we go through these things, when we really do have a risk-off event, stocks tend to get sold regardless of what size or flavor they happen to be. One thing I thought was interesting, if we look at the Mag 7, the Magnificent 7 stocks, this is an ETF that tracks the Mag 7. And I just want to kind of point out how weak this has been, right? And if you're unfamiliar, the Magnificent 7 is Google, it's NVIDIA, Apple, Meta, Microsoft, Amazon, and Tesla, I believe. So this is an ETF that kind of weights these almost equally. But what I can show you is that, this was really declining well before the war started. This group, which has been pretty strong over the last few years, has been very, very weak. And I thought this was kind of interesting. So it closed at 58.27 on Thursday, and I'm going to do my best to kind of draw a line here. But you can see that is actually below. We go all the way back here to this pre-tariff high. Was 58.69. I don't know if I have that drawn exactly perfect. You can see that data point over here was, I believe, December of 24. Yeah, December 18th, 2024, put in that high of 58.69. We are trading just below that. So the Mag 7 as a group, not necessarily all of them individually, but as a group, been extremely weak and has essentially given back all of its 2025 gains. Really, anything going back to December of 2024, depending on where you bought it in December. So I thought that was interesting. Those are kind of the big stocks a lot of people are paying attention to, but they've been very soft. These are no longer leaders, so to speak. Let's look at Bitcoin. Bitcoin has been in. Let me see. Let me kind of move this back. All right, let me lock this up here. Okay, so Bitcoin, this has been extremely weak as well. Okay, it peaked somewhere back in the fall, and once it broke the 50-day, this red line, it has been just basically straight down. So it kind of comes down, and then it kind of goes sideways, and it kind of comes back into this 50-day line. It gets above it for a couple days, but this 50 has been a lot of resistance, and you can see it kind of fails there, goes down again, and now it's kind of coming back into the 50. I don't have any position here. I look at this more as like a risk on, risk off sentiment indicator, and this has been just extremely weak. That's not to say it can't turn around. It kind of has this low point here that it's trying to build. But to me, this thing kind of has a lot to prove. It should stay above that if it's going to start building an uptrend, but you can see it's kind of coming back into this resistance level. So that'll be kind of interesting just to kind of see, can we get, can we get some of that speculation back, right? That tends to be, even if you don't invest in things like this. Like I said, this is not something I'm typically involved in, but that said, I do like to look at it as kind of a measure of sentiment and market strength, along with a lot of other things. So we'll just see. But let's kind of go through and we can look at some individual stocks as well. Let me pull up kind of a list that I made. All right. So when we are in a market like we are in, what I like to do is, again, just a reminder, we're in a market where the broad market is falling, and most stocks are just going to follow the market. If the market is weak, individual stocks are likely to be very weak as well. We have the S&P 500 and the NASDAQ, below their 50-day, below their 200-day. And so what I did when I was running my screens is I put together a list of stocks that are, in order to be on this list, you have to be above your 200-day and your 50-day. Okay, and your 50-day has to be above your 200-day. So that's kind of how I did this. There's some other criteria as well, but what I'm really looking for is what are some of the stocks that are holding up the best in an environment like this, where what we're trying to do is trying to identify some leadership. Okay, so we'll just kind of run through some of these quick. You can see AMD kind of barely made the cut here. It's just barely above its 50. The 50 is kind of declining, but nonetheless, it's kind of held its 200-day. And this doesn't look terrible. You kind of have this line in the sand. You don't want to see it go, lose the 50, lose the 200, but it's kind of gone down there a few times, and it's just kind of holding. So one, I think, to keep an eye on. This space, the semiconductors, has not been super strong, but this has been holding up a little bit better than some of the others. Akamai, this is benefiting from some of the new agentic ATI and some of these things that are now surfing the internet that are not humans. And again, this doesn't have the earnings and sales profile that I typically like to see, but it is in a very, very strong group. And we'll see some others on this list as we keep going. Alcoa, now this is an aluminum producer. There's a lot going on with like steel tariffs, aluminum tariffs. You've probably seen that in the news. And while this has been very, very volatile and it kind of lost its 50-day, it kind of shot right back up. It's been really volatile up here at the top. But nonetheless, you can see its 200 days all the way down here. It is above the 10, 20, and the 50 and looking pretty strong. I'm not coming after it up here, for me personally. It's a little extended. This price action is just really volatile and loose, but nonetheless, something to keep an eye on. Okay, AAOI. Again, talk about wide and loose. This is an extremely volatile name, but it is in probably one of the strongest groups that we've seen, which is the optic companies, which some of these others, the fiber optic companies. Some of the others are going to be on this list, like GLW, which is Corning, Ciena, Lumentum, and we'll kind of see those charts all holding up as well too. But this is a smaller cap stock. You can see the earnings and sales growth is extremely high over here. Price action has been also extremely volatile. So this would be something that'd be very difficult to hold if you're managing your risk, but nonetheless, it meets the criteria, and it's something we want to kind of keep an eye on. Argan is a heavy construction builder, and this has been kind of a nice smooth trender. If you were looking at a chart like this, you really wouldn't know that the general market was in too much trouble at all. Let's see, ATI, I believe this is an aerospace and defense name. And this, again, this looks pretty good. Now, it kind of ran up and having sort of an orderly pullback, but again, this showing some relative strength to the market. BWX Technologies, same thing. This thing has just been up and down and really volatile, but still kind of hanging out near highs. CRS, so Carpenter Technologies, this somewhat company is very similar, kind of in a similar group to ATI, where they make these specialty metals for aerospace and defense and some other sectors, electricity generation and such. And again, this is, had some volatile weeks here, but this looks a lot better than a lot of other charts. Caterpillar, full disclosure, our trend strategy has a small position in Caterpillar. This had made a big move up and has kind of had a pretty orderly pullback. It's undercut the 50-day a couple of times, but it's really kind of holding in there and looking okay. So we'll see if this can kind of build out, a right side of this base and see if it can't come back up and maybe take out those highs. But you have a very clear place where, you don't want to start seeing, multiple closes, below the 50, or certainly kind of break of where these lows are. I think that would be your small loss exit point that, hey, this thing's just not ready to go. But again, this thing's been holding together pretty good. Centrally Aluminum, another aluminum company. Let's go Ciena. So I mentioned Ciena, again, another one of the very strong fiber optic names. Cloudflare, again, I would put this in the group with Alchemy and Fastly, where it's benefiting from some of this new agentic AI and the internet applications that kind of deliver some of these solutions around, both how internet content is delivered, as well as some of the security around that. And this is kind of building a nice cup and handle. And we'll just kind of see how this comes out. I think it's got to kind of take out this level, but you kind of have a pretty clear line in the sand down here too. Now, this one, I guess I did break the rule a little bit. The 50-day is below the 200-day in this case. Nonetheless, price is above both. Coherent, this is not quite in the fiber optics group. They manufacture some of these components. You could kind of put them in that fiber optic group. They're not as pure of a play. But again, kind of hanging out at highs, been very, very choppy stock up here. We'd really like to see this just kind of tighten up a little bit. And that's maybe a big ask when we have a market that's been as volatile as it's been. But you can see how, back here, we didn't have, this kind of these big wide bars in this price action. So it gives you a sense of how volatile things have been. Comfort Systems, AC and cooling systems on an industrial scale. Let's see. This is another company that makes some aluminum and related products. Again, holding in pretty good near highs. Corning, again, fiber optics. This is one that I kind of mentioned when we were looking at some of the others. Again, showing good strength there. Dell. I thought Dell is a really interesting one. Dell had really went up. Let me go back to a weekly chart on Dell. Let's see. Dell had an earnings announcement that I think surprised people, and they go up on earnings, okay, and then it's pulled back a little, but then really kind of gone up nicely, and it's had a little shakeout. But what is really interesting back on the weekly chart here is you can kind of see it's trying to make a new all-time high. And it's possible that we're kind of there. Let me see if I can go back and see where this was. Okay, so the high of this bar back here, it didn't close there, but the high was at 179. That was the old kind of intraday high back here, and we're trading just below that now. So Dell is approaching kind of a spot that I always kind of find interesting. Is can this take out these old highs? Can it finally get kind of above that and then make like a leg higher? We'll just have to see. But again, forward earnings and sales estimates were taken up quite a bit, and people were kind of surprised that some of that positivity in the last earnings report. So we'll just kind of see if they can get some traction and take out that old high. DigitalOcean, again, this is kind of in the group with Akamai and Fastly, again, kind of holding in near highs. Fabrinet, this is an electric contract manufacturer, and it looks good. This thing has been extremely choppy. I've watched this for a while. I've never had a position in it. It's just, I have a really hard time trying to figure out how to get involved in this. It is up and down, up and down. And when you kind of look back at this chart, it's had this one kind of move where it breaks out and has this nice linear run that we kind of look for on these breakouts. But you can see outside of that, this thing is very, very choppy. It just doesn't offer, that nice clean move where some stocks historically trend a little bit better. This thing is just kind of up and down and all over the place, but it has been, pretty strong given everything that we've seen. Fastly, so this is the leader in that cloud agentic AI, internet content delivery space, kind of an expectation breaker, positive to the upside here on an earnings report, and it's just been up and to the right. We kind of look at that on the weekly chart. So again, this is DigitalOcean, Fastly, Akamai, and Cloudflare. They don't all quite do exactly the same thing, but this is kind of that same group. And when you see a group all kind of doing well, and again, the market's kind of adjusting to those new expectations, this is something to take, to keep an eye on. But granted, it's been on a very strong run, and you still have a lot of overhead. The overhead supply is, from years ago, so maybe it doesn't weigh quite as heavily, but anybody holding this thing from all the way back here is still sitting with a loss. So again, one to keep an eye on. Let's just keep going. Form factor, again, this looks pretty good, holding near highs. GEV, again, full disclosure, our trend portfolio does own GEV. And this has been a really nice trender. If you kind of compare this weekly chart with Fastly, you can kind of get a sense of what I'm talking about. GEV, it kind of breaks out of this little, not the best consolidation, but it trends very nicely when it moves, kind of goes sideways, corrects, but then when it's ready to go, it kind of moves up, right? It goes through another consolidation period and it kind of moves up, right? Versus if you remember that, chart of Fabrinet, it's just up, down, up, down, up, down, up, down. And so I tend to, at least the way I like to position myself and where I kind of look for an entry and exit on these types of things, I like to prioritize stocks that do tend to trend nicely when they do break out or have some history of that, even though there's no guarantee they might do that in the future. So again, GEV looks pretty good. And, again, kind of cleared above. You still have your 50-day and your 200-day in an uptrend, 10, 20-day still in an uptrend, looks pretty good. KLA, and looks pretty good. Lumentum, this is another fiber optics name. Again, really choppy up here, but this thing has just made an absolute monster of a move. Marvell Technologies, again, very choppy, but showing some strength. They recently got an investment from NVIDIA. Earnings and sales growth looks pretty strong. I think this is something to keep an eye on. Modine Manufacturing, again, hanging out near highs, but very choppy. Invent Electric. Planet Labs. So this is one of the space companies, and the space theme tends to look pretty good in comparison to a lot of others, where a lot of things are under a lot of selling pressure and distribution. Space as a whole is holding up a little bit better, but this stock is one of the reasons right now it looks to be like one of the leaders in the group. This company is not quite yet profitable, but kind of approaching that spot. And so we'll just, again, this is stuff I like to keep an eye on. Companies that are doing something new and the market is telling you that the market wants to accumulate shares. And so that's something that I like to just kind of keep an eye on to see, how this new theme might emerge. Powell Industries looks good up near highs. Again, they make kind of different various things for, everything electrical energy. Quanta Services, again, this is a builder or construction and maintenance and repairs and everything for utilities, oil, gas, energy. And this has been pretty good. It's kind of been consolidating up here. You've had a couple of shakedowns to the 50-day, but by and large, this has had a lot of relative strength to the market. SanDisk, I think this is very interesting. This is one of the memory names that's made a very big move. It's been very choppy up here. The other big name was Micron, and Micron is now below the 50-day, so it's not on this list. And Micron kind of went up on earnings and got hit very, very hard. And you can actually see SanDisk got hit very hard at that same time. But SanDisk has kind of bounced back and held up a little bit better. Again, I think this is still a theme to keep an eye on. The earnings growth anticipated here is just monstrous. I mean, if you look at it, they earned almost $3 a share in 2025, and their forecast to earn $40 a share in 2026, and $88 a share in 27. Again, those are estimates, but that is just that is insane growth. Now everybody knows that, right? So you always have to remember everybody knows that, or at least they should know that. So that's not news. But again, it's still hanging out near highs after a very big move. It would be great to see this kind of tighten up, get support, and see if it can kind of build out a base and see if it wants to go higher. Seagate, this is another memory name. It looks a lot like SanDisk, a little less volatile. It's had a little less spectacular of a move, but also still a very big move nonetheless. SEI, this thing, again, has just been very, very choppy. Even kind of going back here, it's kind of shook out the 50-day several times. It's hanging out just above that now. It tried to go, and then it's come back in. And I think this is really just a symptom that you see in a market like the one we're in. It's just really volatile. It is really tough to have stocks, break out and make new highs and just keep running when you are in a environment where the overall backdrop is heavy and there's a lot of distribution in the general market. But again, we're keeping an eye on leaders to try to understand where the leadership is. So when pressure is relieved off the market, what we've got kind of our list ready, right? Teradyne, again, this is another one we own a very small position in the trend portfolio. And again, it's kind of been kind of consolidating, had, a pullback here to the 50 and then making higher lows in this pullback. And it'd be nice to see this kind of tighten up and again, try to build out a right side, see if it can kind of get back up here and take out highs. Tower Semi, one of the smaller semiconductor stocks, but clearly one of the strongest. So again, one to keep an eye on here. Ubiquity, near highs. BRT, same thing, earnings gap, and has trended very nicely and just kind of consolidating up here. Viavi, this is another optics name. This is again a smaller cap stock, but again, when you see a lot of companies in the same theme, all up near highs. I mean, that, the market is telling you something. This is something to pay attention to. Again, there's really good things happening in this space overall. Western Digital, again, another memory name. This one looks a lot like STX if you kind of walk through it. Let's see, and then Woodward, which is a again, I believe a defense company. So again, this is had a pretty orderly pullback as well, undercut of the 50, but now kind of popping up above there and seeing if it can break out. And that's kind of the list. So again, we could look at a lot of charts that look ugly. There's plenty of them out there. I think the poster child of that has to be something like an Oracle, okay, where Oracle kind of went up last fall and hit this high of 345, and it's just, it comes down, it breaks the 50, and it just keeps going. I mean, this thing, this is literally the definition of a downtrend. You see how it can't get back above the 20 for more than a day or two, and it just keeps going down and down and down. So again, there's a number of charts that look like this. I think that this is probably one of the worst, and this is another really good example of when something pulls back, you got something at 345, and you might think that, oh well, if I'm buying it down here at 250, and it was $100 more expensive, and I'm getting this deal and I'm smart and I'm buying the pullback. Well, if you did that, you're down a lot from there. Right. So one of the things I like to talk about, in our strategy is, we're not smart enough to know where the low is. Right. We want something to be moving in the direction we want it to go. And then we're just looking for, a logical place where we can get involved to kind of manage our risk. We set a stop. So, we know if the trade goes against us, where we're going to get it out, or where we're going to cut it to keep the loss small, where, we would take our profits if it works in our favor. And we just try to run that process, over and over and over again, rather than trying to guess or think that we're smarter than the market, because we certainly are not. I think last time I looked at Netflix with everybody as kind of the example for this. You can see Netflix from there needed to go down further. But this is kind of what I'm talking about. This kind of looks like the Oracle chart. And now it's kind of showing some strength, right? So if you're bullish Netflix or you're bullish Oracle, again, the whole point of what I'm trying to tell you is, instead of you trying to pick and say, let it start showing some strength that it wants to go in the direction you think it's going to go, right? These stocks, when we were looking at these stocks on my list here above the 50 and above the 200, this was not stocks that I quote unquote like. I'm just looking at the criteria and then seeing what comes back at me. Okay. Let the market tell you. It's just easier. Okay. Again, I probably still wouldn't want to get involved in this. It doesn't look too bad. I don't love that it's below its 200-day. You have a 200-day that's sloping down, even though it's had some of this. I don't know for me that this is something you get involved. But again, if you think of the principle, rather than trying to guess on something on the way down, if you like Netflix, you've got kind of a pivot here at around $100. If it can kind of take out this little short-term high and start going higher, well, I would rather take it there than guess as while this is happening, right? I'd like to buy it while it's going in the direction I want it to go. And by the way, if it's going to make a big move, just to get back up to these old highs, 134. I mean, if it clears 100, it's still got to go up 34% from there. right. So, there's plenty of time, right? But it is more capital efficient to deal with things that are moving in the direction you want to go. It is also smarter to wait until the general market is more conducive to stocks going up anyway, right? So again, we kind of going back to where we were in the beginning, we want to see this go up, take out these levels and start to kind of show some strength in the general market. Okay. Until then, it's smarter to kind of doesn't mean you can't do anything, but to have a little smaller size on until the market proves itself that it's ready to potentially come out of this, and then you can add exposure and kind of keep going from there. So again, a lot to think about, but again, these are kind of the things that I look at when I'm trying to assess, where are we, where is the trend, what would we look for on the upside, the downside, what's actionable, what stocks are holding up better. And since I'm in here kind of working on some of those things this weekend, I thought some of you might appreciate some of those thoughts. So hopefully this was helpful. If you like this kind of content or found this to be helpful, please like, subscribe to the YouTube channel. Feel welcome to share. I appreciate you hanging out with me, and we'll see you on the next one. Take care.